Good evening and welcome to you all, my dear friends, to another episode of a wonderful, progressive, well performing company, a chemical company, Himadri Speciality Chemicals Limited. Himadri Speciality Chemical Limited is primarily engaged in the manufacture of carbon materials and allied chemicals. It is the number one coal pitch manufacturer in India, only company to manufacture advanced carbon materials in India. It is also the largest player of naphthalene and SNF in India. The management consists of Anurag Chaudhary, Chairman, MD and CEO. Shyam Sundar Chaudhary is the Executive Director. Amit Chaudhary is another Executive Director. So it's all in the family. The product portfolio consists of multiple specialty carbon product segments like coal tar pitch, carbon black, naphthalene and refined naphthalene, SNF and specialty oils, etc. It has developed, this coal tar pitch has got a developed life of specialized anodes pitch, one of the very few global manufacturers, and improved life of anodes through continuous process improvements. So basically, coal tar pitch is used in specialized anodes. Carbon black has launched a series of application specific blacks with superior performance parameters which find application in fibers, semi-con cables, engineering plastics, inks, etc. It has also developed food grade carbon black. Then advanced carbon materials. It has developed technology to manufacture anode material for lithium ion batteries, thereby entering into a select club of very few companies globally to do so. So, this lithium ion battery is picking up speed in terms of demand. Now, supply has to match. So, demand is coming. All electric vehicles, two-wheelers, three-wheelers, four-wheelers, everything. And many other applications are there for lithium ion batteries. Then SNF and PCE. It has developed application specific SNF for non-construction segment like agri chemicals, gypsum, latex and some next generation products in PCE. So it has got a wonderful R&D team which has enabled Himadri to forward integrate and regularly launch new specialized products as well as improve the quality of existing products significantly. See, this process is going on in its R&D labs continuously. Now the revenue mix, if you look at that, carbon materials and chemicals account for 99%, power accounts for 1%. Geographical split, as of today, it is India only, maximum 86%, something like that. Export 14%. The company has got 7 manufacturing facilities in India. 7 manufacturing facilities in India. Out of which 4 are located in West Bengal, 1 in Chhattisgarh, 1 in Andhra Pradesh, 1 in Odisha. Additionally, it also owns 1 facility in China. So, as on March 31st, 2021, that is 2 years ago, It had a coal tar distillation capacity of 5 lakh MTPA, carbon black capacity of 1 lakh 80,000 MTPA, SNF capacity of 68,000 MTPA, advanced carbon 600 MTPA, captive power plant 20 megawatts. So the company recorded a sales volume of 3,71,900 MTPA of carbon materials and chemicals in FY22. It is further progressing in FY23. FY23 first quarter is over. There is a difference between how it counts its financial year. Himadri's financial year coincides with the calendar year. So, January to March 2023 is Q1 of FY23 here. Industrial applications. The products offered by the company are used across different industries: paints, plastics, fiber, anti-corrosive material, defense, aluminium, infrastructure, rubber industries, power, etc. Clients include Vedanta, MRF Tires, Apollo Tires, Pidilite, Hindalco, Cooper Standard, Birla Tires, Seat, Good Tire. So, tire industries especially, all of them are using the services of Himadri. Capex. In FY22, the Capex was 231.6 crores. It includes, of course, works in progress, capital advance, etc. So the company is now focusing on making raw materials for lithium-ion batteries. It is aligned with the transition to electric vehicles and is building a robust portfolio for electric vehicles, mainly lithium-ion batteries. Highest ever volumes in Q1. Reported sales volume is 1,09,229 metric tons. So it has crossed 1 lakh metric tons in Q1 itself. Then highest ever revenues. It jumped by 94% to 1,047 crores in Q1 FY23. As I told, Q1 FY23 here means January to March FY23. So it has gone from 540 crores in Q1 of last year to 834 crores in Q4 FY22. And further from there to 1,047 in the latest quarter. Significant jump in EBITDA. It jumped by 131% to 85 crores in Q1 of FY23 from 37 crores in Q1 of FY22 and 55 crores in Q4 FY22. That is quarter on quarter improvement is 55.6%. Profit before tax jumped to 48 crores in Q1 from 19 crores in Q1 of last year, that is 159.1%, and from 27 crores in the previous quarter, that is 80.1% quarter on quarter also. Net debt has been reduced to 315 crores in March 22 from 583 crores in March 21. See, from 583 crores last year, same quarter, to 315 crores in the latest quarter. Debt equity ratio has fallen to very low levels like 0.17, very impressive that. Net revenue jumped by 93.91% year on year, gross profits by 86.22%, EBITDA by 137.22%, EBIT by 139.99%, profit before tax by 176%, and net profit by 167%. So the Himadri Speciality Chemicals is going from strength to strength. Long way to go still. Now, what is its future strategy? It wants to address the needs of critical raw material requirements for lithium ion batteries. High value product pipeline it wants to develop. Based on that product, in each product it wants to be the leader. For that, supportive strong R&D is there. Diversified end markets are there, India and export also. Export has not been tapped well so far. Now the management team is looking at global scenario. Now let us take a look at the Q1FY23, that is March 23 quarter ending. Net sales are 1029 crores, previous quarter 1037 crores, and year ago quarter 834 crores. Year on year improvement is 23.4%, but quarter on quarter there is a slight backward march by 0.82%. Raw materials have also gone up by 2.05%, and the between the previous quarter and this quarter there is a fall of 17.79%, which is very good. Net profit is 76.72 crores, previous quarter 63 crores, and year ago quarter 21.2 crores. The year on year jump is 262 crores, and quarter on quarter jump is 22 crores. Equity is 43.27 crores. Basic EPS is 1.81. PE ratio based on that goes to 17.96. 17.96 actually it has fallen down from somewhere around 25 to 17.96 because of superior performance. Market cap is 5,598 crores. Current price is 130. 52-week high is 134. 50-week low is 55. Book value is 50. So ROCE is 13.7%. It is climbing up now, but it is spending a lot of money on expansion. Therefore, ROCE is not climbing much. After all these things, capital expenditure is over, it will again start climbing further. ROE is 11.8%. Face value is 1 rupee. Now, if you look at the price curve, it is on an uptrend like this continuously from March 23. Debtors days have improved from 70 to 44.2 days. Working capital requirements have been reduced from 95 to 70 days. Annual EPS growth is very good. Good quarterly growth in Q1. ROCE is improving in the last 2 years. Net profit and net profit margin both are improving quarter on quarter and year on year both. Company has low debt. Debt is very low. Book value per share is improving for the last 2 years. Company with zero promoters pledge, which is a very good thing. The promoters pledge is zero. Good operating profit and operating profit margin. Now the price is very near to the 52-week high. Price momentum also has become a little upward, very good. But the stock is trading 2.57 times of its book value. It has got a low return on equity. Dividend payout has also been low. Promoters holding has decreased by 3.28%. Mutual funds have decreased their shareholding. Compared to last quarter, the revenue has come down. That is also a negative point. But Money Control has given it a good rating, 75%. Money Control Technicals says it is very bullish, and we see March onwards it is going up like this. Book value is around 43. Price is just 3.17% away from the 52-week high, but 134% away from 52-week low. Momentum is bullish. It is an outperformer compared to Nifty 50. Piotrowski score is around 7, which indicates strong financials. Market cap is somewhat high in the industry. Price earning ratio is below the industry median, which is good. Price to book ratio is below the industry median, that is also good. Profit growth is very good. Revenue growth is very good. Operating profit margin is very good. Now, promoters have increased their holdings in the March quarter from 45.38 to 45.62. Mutual funds have decreased their holding from 0.5 to 0.48. FIAs have decreased their holdings from 2.38 to 2.36% in the latest quarter. Institutional investors have decreased their holdings from 2.88% to 2.84%. Now, when you look at the price performance, last week there is a slight reduction of 2%, but on a monthly chart, 6% increase, 3 monthly chart, 42% increase, 1 year, 96.95% increase, 3 years, 181.66% increase. So it was a multi-bagger to a certain extent. So, some of these plus points, please remember. That is why I tell you, whatever I am telling, listen to it twice, thrice, and then take your decisions. Now, quarterly we have seen it has performed well. Now we'll see annual profit and loss accounts. Sales have gone up in the last 5 years. For last 5 years, March FY19 to FY23. March 23. Sales have gone up from 2,422 crores to 4,172 crores. Operating profit has come down. See, in March 19 it was 560, thereafter it came down to 280, 131, 156, but now again it has climbed up to 399. Operating profit margin is now 10%, 5 years ago it was 23%, but last year it had fallen to 6%, now it has climbed to 10%. Net profit has climbed to 216 from very low levels of 39, 47, 205, etc. So sales growth is there, profit growth is there. 5 years before means 1 year, that one, 5th year before, that you leave. All other parameters are very good. Debtor days has fallen from 66 to 44. Inventory days have fallen from 125 to 61. Days payable fallen from 127 to 39. Cash conversion cycle approximately the same, 65, 66. Working capital days 63 to 70, it has increased. ROC has increased from 5% to 14%, which is very good. Shareholding we have seen now 45.61 promoters, FIS 2.36, slight reduction. DIA is slight reduction 0.48, public 51.54, slight reduction. Now, so these are the strict parameters. Now we do hope that the demand is increasing. We do hope that the electric vehicles production will go on increasing. With that, the demand for lithium-ion batteries will increase, and with that, the products manufactured by Himadri also will be in great demand. So the transformation unfolds from growing carbon value chain to promising mobility and energy storage opportunity. Himadri will address a substantial part of the critical raw material requirements for lithium ion batteries. Sustainable growth is there in the core business through value added products. Its R&D is continuously working towards that. So it is developing a specialized coal tar pitch and application specific carbon black and battery material, semicon cables, many useful things it is developing. It is developing application non-specific SNF for construction segment and also next generation products in PCE. So basically R&D is very good. Therefore you can say it will survive, it will grow. In FY23 especially the revenues are record Q1. Sales volume in metric tons also is a record. Increase in EBITDA, increase in profit after tax. So Q1 is a success story. Now the previous quarter also was very good. Therefore, in one or two parameters compared quarter on quarter basis, you may find some reduction. But overall, in many parameters, the Q1, latest Q1 is a record. Therefore, we also hope that Himadri will produce better and better and better results in the quarters to come, because electric vehicles requirements for lithium ion batteries is increasing constantly. The future belongs to electric vehicles. So the future belongs to lithium ion batteries. Therefore, the future belongs to Himadri. Thank you for listening. I'll be back again with you with another very good company. Now, you must listen to these videos. See, I have taken a long time for making the videos. You take some time, say, for listening to it 2 or 3 times. Note down good points and take your own decisions for buying, holding, selling, etc. Always, once a particular company is a part of your portfolio, you must look at its results every quarter. It is money, man. You will have to take care of your money. Then only it will grow. If a company does not grow, your portfolio will not grow. If a company is growing fast, your portfolio also is growing fast. It is as simple as that. Thank you for listening. Ask your friends also to subscribe. If you have not subscribed, subscribe to my channel, because I am giving you some of the very best companies which are producing great results. Again repeat, the latest results may be very, very good. For Himadri it is very, very good. But you can never say. Some companies give bright results, but sometime or other make mistakes and fall down. Then it goes out of our portfolio. No sentimental attachment to any particular company. Thank you for listening. I will be back with you with another very good company. I wish you all the best.